What if I tell you that you have been trading supply and demand the wrong way? And that is why you have not been consistently profitable in the market. You lack an edge because you have been taught the wrong approach to supply and demand. And in this video, I'm going to show you a new way to approach the market using supply and demand and increase your win rate and become more consistent and have an edge in the market. So without wasting time, let's dive in. The conventional supply and demand will show you things like this. We have this first scenario that says drop base rally, meaning price came down, consolidate, and then push high. Then the next one here says rally base drop, meaning price move up, consolidate, and then drop. Then the next one here says drop base drop, a drop down, a consolidation, and a drop down. Then the last one here says rally base rally, a push up, consolidation, and a push up. There's nothing wrong here, just that I will show you the flaws in trading supply and demand this way. What most people do is that this is how they trade. They wait for price to come in here, okay, and they expect price to push high. The same thing right here. They expect price to come in and then they sell. Same thing here. They expect price to come in and then sell. Then the last one, same thing here. They expect price to come back in and then they buy. All right. In this case here, they see all this area as a supply, a demand zone. In this case, a demand zone that sponsor the push high. And then they will tell you something like the institution manipulated price here and then push price up. Yeah, that region could be valid area of demand. This region also could be valid area of supply. But the flaw I have with that is that when you are looking at supply and demand, we are looking at a single price, one price. If you go to the market to buy a laptop, the seller will tell you the laptop is $1,000. One price, that is the supply. All right. For the buyer, it is the demand, and for the seller, that is the supply. Okay. Supply is simply a price. All right. So if you translate this into candlesticks, this is how they may draw it out, annotate it on the chart. They move upward, they look at the last bearish candle before that, and then they mark it as supply zone. They call it a zone. All right. Same thing here. They mark somewhere here and they say this is a demand zone, this is a demand zone, this is a supply zone. And then we have the hidden base where they mark something like this and say this is a zone to sell. And then this area here is a zone to buy. All right. Now, I've been trading this way. I'm profitable with it. Just that I have a little bit problem with this methodology. Because if truly we are trading supply and demand, I should be focusing on a price. At what price will price come back in here before moving? And that is what I trained myself over the years to accomplish. All right. For example, if I decide to buy here, if I decide to buy at this point, okay, this is a demand zone, is valid. Let's agree it's valid. All right. I decide to buy here. What happens then? What this creates is that it creates room for more drawdown for me, because this entire place price can decide to go down to this point before moving up. And as a trader, you know that messes up with your psychology, because the true profitable trader are traders that understand how to manage their risk and then how to control their emotions. Okay, so if I buy at this range, I'll be giving room for a lot of drawdown. All right, if I buy at this point here, I'll be giving room for a lot of drawdown. If I buy here, okay, so at what point? That is the question now. Same thing with this level here. If I sell at the top here, at the bottom here, price may decide to push down, okay, before moving in. All right, so that is one problem, the problem of dealing with prices in a range. I don't want to use range. All right, is either I take a price here, if it goes some few pips I'm out, or I wait for it to get here, go down, and then before moving up. So the problem number one I have here is price in a range. Price in a range. All right, that is problem number one. In this case, you are not sure which of this level will take price to the upside. Number two is in terms of decision making. How do you know if the supply and demand has ended? For example, if price comes back down here, how do I know that this demand zone will not hold? I don't know. All right, is it that if candle close below this level, we have a close downwards below this level, or we have a close below this level, where because it's a zone, we are not sure how to determine that in this case the demand has failed. Same thing with here for a bullish. If I have a close inside this, does it show that the demand is still there or supply is still there? If I have a close inside here, or will I have to wait till the entire week is taken before I know that the demand is gone or the supply is gone? So these are the questions I ask myself over time, and now I will show you the right way to do that. But before you understand how I trade my own supply levels, I want to quickly show you the definition of supply and demand. So if you look at the definition I put in here, demand is the total number of goods or services a buyer is willing and able to buy at a specific price. Specific price. It could be $10, it could be $20, it could be $2, it could be $1,000 at a particular point in time. Because Forex trading is all about price, yeah, and time, yeah. All right, price and time. Those are what determines the movement of Forex pairs, the movement of any commodity, the movement of any asset class. Time, which is on the x-axis, and then price, which is on the y-axis here. In this case, this is time. So the key thing here is specific price and at a particular time. So in this time, I will simply look at it in form of time frames as well, daily, weekly, monthly, and the rest, because there are supply levels at each of these time frame. All right, so supply, on the other hand, is the total number of goods or services. Now, the goods or services here that we trade is the total number of lot size of gold you are willing to buy. At what price? The total number of lot size of Euro USD you are willing to sell. At what price? Okay. In this case, you can remove goods or services and put in financial asset. So yeah, I say supply is the total number of financial assets a seller is willing and able to sell at a particular price. Because when you are buying a trade, if you look at your MT4, they will tell you you are buying at a particular price. And once price start moving above that price, you are in profit. If it goes below that price, you are in loss. All right? Unrealized profit and loss. So it is the price that matters. Okay? The more closer to that price, the better your strike rate is. Because the truth is, to be successful in Forex, your strike rate should be important, should be very strong. All right, this is strike rate. Some people call it the sniper entry. All right, the strike rate needs to be on point. So if you then go back here, so what I do, I will go to clear this. The right way, the new way I trade is to look at the opening price of individual candles, because at the point in time, those prices drove price to the upside or downside. For example, with this now, I'm going to mark out this level as my demand level. Now let's assume I have a candle, bearish candle coming down. Yeah. All right. And then it has a wick, obviously. So this candle went down and then we have a continuation here. So I call this the continuation opening price. So these are my two demand level I'll be paying attention to. So if price comes in here, this is my first demand level and this is my second, and that is all. I'm not looking at a range. All right. And if I've already confirmed my direction to be bullish, I'm simply going to take a buy trade here. I don't need to wait for any form of confirmation in here. I will simply take the price here. Okay, I will take the trade at that demand level, because if this demand level needs to hold, price needs to reject from there immediately. All right. And if that level do not hold, then this is my last resort here. I'll simply wait for price to do this. So most times I simply, if I have two demand level at a particular place, I'll simply wait for the extreme. Simple as that. Because I don't want to have a series of, maybe I'll get the loss here and then enter. So what I do is simply a choice, because as you build up your strategy, you start to give rules to guide. Most times I will simply wait for the reversal opening price. This is the reversal opening price. And if you do not understand reversal opening price, continuation opening price, I will put in the link here in the description my opening price trading strategy. And how it got bettered was trading supply and demand. All right. So another way you can look at it is, how do you draw this? You simply look at your wick. Mark your wick. Mark your wick. All right. Then remove those wick and then focus on the opening price. All right. That is how I do draw them. I notice them like the hidden base here. In this case here, this is my supply level. All right. So I will use the word level and not zone. It's not a zone. It's this price. This is a price at 2678. This is a particular price that I'm willing to sell. All right. This is a particular price I'm willing to buy. That is supply and demand, not a zone, not a range of prices. If you go to the grocery store, you are going to see a price on those items. So to be successful in Forex, you need to understand when to buy and when to sell. All right. So if we are going to go to the chart and see how this concept plays out. So looking at the weekly, for example, I'm going to do a kind of back test. All right. And then let's see how price respects those. So let's start from here. For example, you can see at this point, obviously there are ways to know if market has changed direction, but let's assume we are bearish from here. So look at it here. This is my supply zone. Let me use the magnet. This is my supply zone. As you can see, price tapping there and rejected. What it's saying is that this level is strong. And once I see this rejection, I know that market should be trading lower, going lower, going lower, going lower. Now, you see here, where did it stop? A demand zone, and it rejected. So when it rejects, it push higher. All right, it push higher. But because the direction is bearish, because if you come to my mentorship, I'm going to teach you how to understand all of this. But I want you to apply this in your point of interest. If you have another block to trade off, maybe your normal supply zone, narrow it down to what I just showed you, and you are going to see significant improvement in your trading. All right. So in this case here, price push up in here. We have rejection here. We have rejection here. We closed. All right. So this supply is about to turn to demand. But what happened? There was no rejection. Price closed below, and then we continue going lower. Same thing. Price came back to that level. You can see it rejected. All right. But eventually it gave way. We pushed down. Price came up to that same level. It rejected. We have a close. If this was a rejection, we would have continued going higher. But what happened? Price closed below. And then we continue going. If you look at how precise those levels are in rejecting price, those are your supply levels. Supply level is a price. This is the price you don't want to be messing with. All right. So by the time market change direction, yeah, there are rules we put in place in here that let us know that the market has changed. As you can see, price find it difficult to pass through this level. All right. Immediately we push higher. What happened? Look at this level here. This is reverse opening price. Price came back down here, rejected, and we started flying. All right. We started flying. Where are we rejecting from? Couple of prices here. Okay. We have this layer. Price rejected from the apex. Have you seen it here? Sniper entry, move down. This will have given you, for this week, imagine 4 bearish candle in a weekly candle. This is a nice bearish movement. So within your lower time frame, you can start looking for sell, 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 sell until you get to where? Price didn't get here, obviously. But if you look at your side here, I know someone will say, it's hindsight trading. No problem. If you have been following my weekly analysis, this is exactly how I trade. I don't look at the market structure per se to see and zoom in and then no, market has taken a particular high. No, I simply look at the supply and demand. Now in this case here, we have different prices here. That's why I said it's a price. Make a decision. Because this market was bearish, I would have waited and see a form of confirmation, probably in the lower time frame, before I start pushing up. Okay, I'm just showing you why you need to be looking at these levels and not zone. Don't look at the other block. Look at the supply level or demand level within that other block. All right, it helps you to reduce drawdown. It gives you a sniper entry and your strike rate becomes high. Now you can see here, price rejected, created a fresh demand here, and then push high. All of this week here, you continue buying in the lower time frame. Okay, continue buying in the lower time frame. We have this level. At first we rejected. Now this was a good rejection, but what happened? As it rejected, it created a supply. This was a good demand, but once you see this supply, that means price is willing to come lower. So the price moved from demand to supply and then push lower. If you are looking to buy here, price closed, rejected, then continue selling. Okay, simple as that. You can try this with any currency pair, any financial market, gold, indices, NAS 100, NAS 30, US 30, FTSE, Bitcoin, different currency pair. You can use it on Tesla, Facebook, X, whatever instrument you trade. All right, backtest this. Okay, if you want to learn more about this, sign up with my newsletter, because the newsletter, what I do is I send out weekly analysis. I'll send out midweek analysis, and that midweek analysis is simply for those who subscribe to the newsletter. So to be part of the newsletter, use the link description. and then sign up for the newsletter. Go back, practice this. In the next video, I'm going to share trade examples that I've taken, example of trade that I've taken, and how I was able to use this to get to the gold level within Darwinex 0. And if you want to know more about Darwinex 0, I also put below a link to a dedicated video on Darwinex 0 so that you can come in and start managing huge capital. So, opening price strategy is important. See the video right here.